Switzerland's trade surplus rose to 3.85 billion francs in June, whereas last week's Swiss ZEW data came in at a disappointing minus 5.4. Here to shed some light on the mixed data is Karsten Junius, chief economist at Safra Sarasin Bank in Zurich. So Karsten, what is your take on recent data from Switzerland, and what is your outlook for growth in Switzerland in the coming months?
Behind the ZEW index that disappointed last week is clearly the development that we had in the European Monetary Union, where all the turmoil and around Greece led to a high degree of uncertainty that obviously also influenced the outlook for the Swiss economy. Behind the trade data is a structural surplus of net exports that we have seen for many years now. That, however, is mitigated by the exchange rate shock from mid-January that led to lower export and higher import data. In the second quarter, we still expect a negative GDP rate, reflecting a recession that has been induced by the exchange rate shock, and which can be seen in lower exports, in higher unemployment data and lower production, especially in some export-related industries like machinery or electrical equipment. Nevertheless, the exchange rate shock also led to a situation where real income from households rose sufficiently to support strong internal demand. And that is also one factor that we look forward to in the second half of the year, that driven by stronger private consumption, we are entering positive growth territory again.
The Transatlantic Trade and Investment Partnership Group members are still in talks over a US-EU trade deal, which seeks to lower tariffs and expand common standards and regulations. As the EU and the US are Switzerland's largest trading partners, how would this deal impact Switzerland?
Well, the deal has certain risks. That is obvious if your two strongest trading partners are further integrating. Trade diversion away from Switzerland could take place. On the other hand, a stronger European Union is definitely something that is benefiting Switzerland because production is very closely integrated between those two currency areas. Then, obviously, also the political response in Switzerland is decisive for the development. And if we look at the bilateral trade agreements or bilateral agreements with the EU, that is something that might change in the future anyway. Hence, it is decisive what political reaction and how the negotiations between Switzerland and the EU are taking place in the coming years, whether we have further integration or fewer integration. And from that, we would then also see the impact on the trade volumes between the two country or currency areas.
Now, the Swiss franc has been trading lower ahead of this morning's trade data, but what is your outlook for the currency going forward?
The outlook for the franc is determined by two factors. One is the recession that is actually leading or should lead to a lower level of the Swiss franc. On the other hand, we still have a lot of uncertainty in financial markets around the further developments of the Eurozone, which leads to repatriation of Swiss foreign direct assets into Swiss franc, and therefore to a stronger Swiss franc. The National Bank of Switzerland is trying to mitigate this upward pressure, and through FX intervention, or most probably through ethical intervention, on which they usually don't talk about, at a level of 103 or 104 towards the US dollar. So preventing a too strong increase of the Swiss franc.
Well, thank you very much, Karsten, for your comments. Well, that is all from me for today. Join us again here on Dukascopy TV tomorrow for more news and analysis. Goodbye for now.